Good afternoon, and thank you for joining today's webinar. We'll be getting started in just a few minutes here. We're just going to give another minute or so to give people some time. Thank you. Good afternoon, and thank you for joining us for today's webinar, Navigating the Paycheck Protection in the SBA Economic Injury Disaster Loan Programs. We'll be getting started in just a minute. I just wanted to go over the one ground rule for today's webinar, that everyone's phone has been placed on mute for this webinar. I'd now like to hand it over to Tom DeVito, our Chief Marketing Officer, to kick off today's webinar.
Thank you, Jared. Good afternoon, everyone, and thank you for joining us today for an update on the PPP and Economic Injury Disaster Loan Programs. On behalf of all of us here at Bloom, we hope that you and your families are both safe and healthy. Before I introduce our speakers, I'd like to emphasize that the information we're about to share is subject to the disclaimer that we'll be sharing during this presentation and included in all the digital and written material that we'll be sending out to you post this call. Our format today will be a presentation from Andrew Latimer and Mike Lacrosse. It'll be covering the PPP and the EIDL programs, as well as an overview of several of the tools the firm has created to assist you in the loan process. We'll wrap up today's call with a Q&A session, and that'll be based on the questions that you have submitted as part of the registration process. So at this time, let me just tell you a little bit about our speakers today. First person we'll hear from is Andrew Latimer. He's the managing partner of our Connecticut offices and the tax partner. Andrew has experience with tax planning, research, and advising clients in a variety of different industries. He also specializes in federal and state taxes. Also joining us is Michael Lacrosse. Mike is a director in our business advisory group and has over 20 years experience in finance and accounting across a variety of different industries, and he actually leads our CFO advisory team. So with that, let me pass it over to Andrew to start us off. Andrew?
Thanks, Tom. I just quickly want to go through our agenda. We'll first do a quick overview of the Economic Injury Disaster Loan. Then we'll do an overview of the Paycheck Protection Program. On top of that, we'll go through a toolkit we have for the PPP loan, as well as talk about some Bloom insights, and then we'll do a Q&A. We've got about 16 questions we're going to go through. Great, thanks. So When we first look at the economic injury disaster loan, which is the EIDL, it's really being used as a lifeline for the small businesses. The application is simple and quick, and there's no cost. So I just wanted you to know that there is no cost to this. These are for small business owners in all of the United States, Washington, D.C., and the territories, and they are eligible for an economic injury disaster loan advance of up to $10,000. So those of you that might have been on the website and applied for it, this is the first thing that happens. It's very simple. It gives you $10,000. After that, the loan provides small businesses with working capital of up to $2 million that can provide vital economic support to them. It helps them overcome the temporary loss of revenue they are experiencing. And just so that everyone knows, you can apply for these loans, and if you do end up getting the loan, there's no need to take the loan if at that time you feel like you don't need it. But it is very important to apply for it, because if you don't apply for it, then you can't get it. So one of the big questions that we have had people ask is, we're going to talk about the Paycheck Protection Program, and people are wondering, am I going to be precluded from applying for that if I also apply for the economic injury disaster loan? And no, you're not precluded from applying for both loans, but you should understand that you cannot pay for the same expenses with the two loans. So what are the terms? Well, the terms are, for not-for-profits, it's a 2.75% interest rate, and for small businesses, it's 3.75%. And the terms, the length of the loan can be up to 30 years, so there's lots of flexibility there. And the other thing I wanted to mention, it's not on the slide, but the first payment can be deferred for 12 months. So if you end up getting the loan, let's say April 15th, you have till April 15, 2020 before you have to make your first payment. What can the funds be used for? Well, those funds can be used for your accounts payable. It can also be used for payroll, fixed debts. So if you have a mortgage out there already, you can help to pay that, and other expenses due to the coronavirus, which I think a lot of us already have. So what are some of the drawbacks of this economic injury disaster loan? Well, just so you know, there's no collateral for any loan under $25,000. But loans over $25,000 do require collateral. In addition, there are personal guarantees for 20% owners of the business for over $25,000 also. So how can I apply for this? Well, first off, I would suggest that you visit the SBA website. And on the SBA website, it says the estimated time to complete the application is 2 hours and 10 minutes. But don't worry, that's not necessarily the case. Like I said before, they want everything to be quick and simple, so they've actually streamlined it after the CARES Act. And so I did the application yesterday on a test run, and it couldn't have been more than 5 minutes. So it's very quick and easy, and that gets you to the initial $10,000 loan. So as I'm doing this, what kind of information am I going to need in order to apply? So when you do the first initial documentation needed, you'll need three things. You'll need the gross receipts for the prior 12 months prior to the January 31st, 2020. You'll need your cost of goods sold for the prior 12 months. And then you'll also need the ownership information. So those things are pretty simple. Now down the road, as the loan gets a little bit bigger and you go for the larger loan, some of the things that they've asked for in the past, so this is potential documentation you would need in order to apply, is you need to complete the SBA loan application, which is SBA Form 5. You need a tax information authorization for the applicant, principals, and affiliates, which is IRS Form 4506T. You need your latest federal income tax. You need personal financial statements, which SBA has a Form 413 you can utilize. And you'll need a schedule of liabilities, which is the SBA Form 2202. One of the other questions that have come up, and again, just as a reminder, everything is very fluid. Things are changing all the time, but some people were asking if I can roll over my EIDL into the Paycheck Protection Program. The answer is yes, you can. You must have received the EIDL between January 31st and the date at which the PPP becomes available. With that, I'm going to pass it over to Mike to talk about the Paycheck Protection Program.
Good afternoon. Thanks for joining the call. During this section, I'm going to take you through an overview of the Paycheck Protection Program, key points, toolkit that Bloom Shapiro has built, application process, and some insights from Bloom. Please note that, as Andrew mentioned, a lot of this information is fluid, and there are some various gray areas in the program today. So, a quick overview. The Paycheck Protection Program is made to help businesses that are impacted by COVID-19. Well, what does that mean? That means that if you're impacted through business interruption in the supply chain, lead times, number of shipments, staffing, decreases in revenue, and various other things, this program is for you. It's intended to retain workers, payroll, cover rent, and mortgage interest. This can be used for nonprofits, veteran businesses, and tribal businesses as well. The loan covers expenses from February 15th to June 30th. And as you know, it can be forgiven assuming it is used for payroll, interest payments, utilities, and rent. The maximum loan is the lesser of the amount of 2 times your average monthly payroll, or $10 million. So some of the key points to the Paycheck Protection Program are that your business must not be over 500 employees. Now, there are a few exceptions to that around the NAICS Code 72, which covers hotels and restaurants, as well as some exceptions around franchises. Some of the key terms that you'll hear are employee. Well, what does employee mean? Employee includes full-time, part-time, obtained from a temporary employee agency, professional employees, as well. Volunteers are not considered employees here. Employees with compensation over $100,000 on an annual prorated basis are also capped. And also, you must have a principal residence in the U.S. When determining the number of employees, you may also need to include the number of employees of the affiliates. Affiliates are defined as one that controls, has power to control, or under common control of a third party. This has come up many times with our clients around our private equity and venture capital clients, where employees of the venture capital or PE may need to be included in the count of the employees. This is going to be determined based on the company's equity ownership and structure of the board. Please make sure that you talk to your private equity firm and your venture capital firm for more details. Some additional key points of the Paycheck Protection Program are around this does cover sole proprietors and independent contractors as long as they're filing their 1099 MISC. Loan proceeds may be used for payroll costs, healthcare benefits, salaries, commissions, mortgage interest, rent, utilities, and interest on other debt. The loan interest rate is at 0.5% and has a maturity of 2 years. Payments can be deferred up to 6 months. However, interest will accrue. There's also no personal guarantee needed and no collateral needed and no fees for this loan. All the terms will be the same for everyone. Please remember that the loan will be forgiven as long as you see loan proceeds for payroll are used for payroll costs, rent, etc. As well as employees and compensation levels are maintained. Due to anticipated high subscription levels, it is anticipated that not more than 25% of the forgiven amount will be for non-payroll related costs. For all details, please see the Paycheck Protection Program website at the U.S. Department of Treasury, which is listed here. So one thing that we thought that would make it easier for folks is to give an example. So let's talk about prior to the loan application. If business X applies for the Paycheck Protection Program on May 1st, and the business had $120,000 in payroll costs last year, or a monthly $10,000 average. This business would be entitled to a guaranteed federal loan equal to $25,000. Now let's say that you've gotten your loan and you're calculating the loan forgiveness. In the first 8 weeks after the business borrows the $25,000, you need to calculate what your payroll costs, your mortgage interest, and utility payments are. If in this case that equals $20,000, business X is eligible to have $20,000 forgiven. The forgiven amount will not create taxable income, and any payments on the loan will not be due until 6 months later. But please remember, interest is accrued monthly during that time. So one of the things that Bloom Shapiro has done is create a loan toolkit for you. You can find this on our website at bloomshapiro.com/coronavirus. And also, it should have been emailed to you this morning and also will be sent out after the webinar. So let's take you through the toolkit. It's designed to be interactive and very simple for folks to use. You'll see a screenshot off to the right. It has drop-down boxes and areas to enter in the date that your business began. And this is actually just a summary of what the calculation would show that your estimated loan would be for this period of time. On the next page is another calculator that can be used for other folks who may have a seasonal business or may have started their business after June 30th. The screenshot has been cut off, but is ultimately able to show from February all the way to March 2020. The links on this page will link to the summary page on the previous page that I just showed you. There is also an annual view here as well. We believe that most people will end up using this for their calculation. But this is a consolidated view of your employee costs needed for the application and also can be used for the loan forgiveness. This will also help you determine the number of employees that have compensation greater than the $100,000 threshold. So now that the loan application is complete, we've also provided you a loan forgiveness calculator. This is the summary of the loan forgiveness calculator, and it works very similar to the calculator that I just talked to. There's a detailed tab that isn't shown here, but you'll see that, again, listed on our website, that will have the details by week for payroll, mortgage interest, rent, utilities, etc. Please note that to recoup 100% of your loan, you must rehire the entire staff or increase the reduced salaries more than 25% by bringing back the people that you may have been reduced. So on the following page is the application process. Now that the toolkit is complete, this is the application process that you'll be following. This is relatively new. This was just launched here late on March 31st, and is made to be very short and very straightforward. The business rules for submitting the application have not been released by the banks, by the SBA yet, but should be released soon. Right now, it is estimated that the starting date of April 3rd for small businesses and sole proprietors is when they can begin applying for the PPP. And then on April 10th, the independent contractors and self-employed individuals can apply. There is a link here that can show you, that will take you to the Treasury website to see all the details around the application process. Please note that you can apply with any SBA lender of federally insured depository or credit union. The SBA website, which Andrew talked to earlier, has a link to show which SBA lenders are available. Also, please note that this is a very fluid situation. The banks are opening the application process, but it does not mean that you'll get the money once you apply. We are hearing that it's going to take days or potentially even weeks. So some additional insights that we've heard through our research here is that the $349 billion does not seem to be enough to cover the needs. The funds will most likely dry up. There's also a lot of gray areas in the CARES Act. One thing that we heard, Steve Mnuchin, the U.S. Treasury Secretary, was on CNBC yesterday. He is saying that they are 100% focused on execution today. However, if the $349 billion runs out, it'll be on the top of his list to go back to Congress on. They're also looking at a Main Street lending program to help mid-sized businesses as well as state and local governments. They are also talking about there could be a potential for stimulus package if needed. All of this, again, is fluid. What we recommend is you contact your bank representative, someone that you already have a relationship, to discuss your business. Also, we're recommending that you apply for both the EIDL and the PPP. And finally, as we've said before, these funds could dry up, so please apply ASAP. Thank you.
Thanks,
Back to
Mike.
you.
Just want to, reiterate that, especially with the PPP loan, that hopefully you've already had that conversation with your banker, but they're going to be the gatekeeper, I think. And so hopefully you've already talked to them about this. And I think the biggest thing is to remember to have all your information ready to go so that once the system is ready for you, you can get all your information in there. As Mike talked about, there are a couple of other, those are the two big programs, but there are a couple of other programs in case those don't work out. So just on a high level, just want to talk about some of these other programs. The first one is the Employee Retention Credit for employers subject to closure or experiencing economic hardship. From a high level, the provision provides for a refundable payroll credit for 50% of the wages paid by employers to employees during this crisis. The credit is available to employers whose operations were either fully or partially suspended due to the COVID-19 related shutdown order. So in other words, if your business wasn't deemed essential and they told you to stay home and not go out and not go, that we understand that there could be some issues with keeping revenue going. The other thing is that just because your operations were ongoing doesn't mean that you weren't hurt by the shutdown from the coronavirus. So if your gross receipts declined by more than 50% when compared to the same quarter in the prior year, you're also eligible for this credit. The credit is based on qualified wages paid to the employee. For employers with greater than 100 full-time employees, qualified wages are the wages paid to those employees when they are not providing services due to the COVID-19 related circumstances that we talked about. For eligible employers with 100 or fewer full-time employees, all employee wages qualify for the credit, whether the employer is open for business or subject to a shutdown order. The credit is provided for the first $10,000 of compensation, including health benefits paid to an eligible employee. The credit is provided for wages paid or incurred from March 13, 2020 through December 31st, 2020. Just to give you an example, if an employer's gross receipts were $100,000 in the first quarter of 2020 and its gross receipts were $210,000 in the first quarter of 2019, therefore the employer's 2020 first quarter gross receipts were approximately 48% of its 2019 first quarter. Accordingly, the employer had a significant decline in gross receipts starting in the first day of the first calendar quarter of 2020. That's the calendar quarter in which gross receipts were less than 50% of the same quarter in 2019, and ending on the first day of that quarter. So therefore, the employer would be entitled to a retention credit with respect to the first quarter. And one of the questions that came out is this credit available if I also go and get the Paycheck Protection Program? And it is not. So if you go for the Paycheck Protection Program, you will not be able to go for the Employee Retention Credit for employers. I wish it was a simple calculation that we could tell you, if you look at the two, it's easy to determine which one you would go, but there's a lot of mitigating factors that you need to go through. But just wanted to let you know that if by chance you don't get the PPP program, there is another program out there. There's also a second program out there called the delay of payment of employer payroll taxes. This provision allows the taxpayers to defer paying the employer portion of certain payroll taxes through the end of 2020. So with all 2020 deferred amounts due in 2 equal installments, one at the end of 2021 and the other at the end of 2022. So the payroll taxes that can be deferred include the employer portion of the FICA taxes. So for instance, if you were going to pay the payroll taxes of the 6.2% for FICA, instead of paying them in 2020, you are allowed to defer that and pay 50% by the end of 2021 and 50% by the end of 2022. We've been working a lot with our payroll providers on this credit as well. And again, the deferral of the employer payroll taxes is not provided to employers who are also receiving assistance through the Paycheck Protection Program. So we just wanted to throw out a couple of other provisions that are out there for small businesses, just in case the PPP doesn't work out.
Thank you, gentlemen. Before we get going on our Q&A portion of today's webinar, I'd like to share with you that our focus will be on those questions that were submitted by this audience through the registration process and related to the information we covered today. We received over 150 of those questions, so we grouped them the best we could. I also mentioned this because we've received several questions that were very specific to unique circumstances. And for those, we would like to point you, our clients, to your Bloom partner who will access our tax force and get you answers, pretty quickly on each one of those. For all others, please submit your questions through the Q&A function on the webinar here, and we'll get back to you the best time frame we can. There was also a number of questions that were employment related, and as such, we decided we'll be hosting a separate webcast focused specifically on the employment related issues. And we're going to run that on Tuesday, April 7th at 11 a.m. And we'll be covering all the new employment provisions, including emergency paid sick, along with the family and leave portion. We'll talk about navigating layoffs, furloughs, and rehiring, and also leave calculations, as well as tracking and payroll credits. So all those will be covered by two of our experts on Tuesday, April 7th. So with that, why don't we start with some of the questions. The first one, I believe, gentlemen, you did cover, but I think it's worth repeating. What should a company be doing right now?
I think right now what companies should be doing, and I kind of said this probably about 5-10 minutes ago, is you should absolutely be contacting your banker, and especially given the PPP loan. Some of the other things that you should be doing is checking out the SBA website. We did talk about the economic injury disaster loan. There are some other SBA loans that are out there. One of the things that we talked about is loan forgiveness for the PPP. Just as we talk about it, the economic injury disaster loan is a non-forgivable loan. So I just did want to bring that up, but the thought process would be talking to your bankers, checking out the SBA website, seeing what other loans you might be able to do, as well as, I would also talk with your payroll provider to see if they're ready to go just in case the PPP loan doesn't come to fruition.
Next question, what are the top funding options small business owners should be focused on?
I think that, if you think about the 4 programs that we looked at, those are the 4 loans I think that probably make the most sense. And that would be the economic injury disaster loan, the Paycheck Protection Program, the employer retention credit, and the delayed payment of employer payroll taxes.
Thank you, Andrew. We are a U.S. company, 100% foreign owned. Are we eligible for PPP?
So So there's nothing specific in the CARES Act that says you're not. However, assuming that the business is a U.S. entity, and it has less than 500 people, and so ultimately our interpretation is that this entity is eligible for the PPP.
And it should be noted that if you are foreign owned, that taking the loan proceeds and shipping them up to the parent overseas would not be allowed.
This one we've heard quite a few times. How do you calculate the 500 employees?
Yeah, so I referred to this a couple of times when I was talking through the toolkit. There's 3 different ways to calculate the 500 employees, and it all depends on your type of business. The first and probably most relevant to the folks on the phone is going to be the 1-year average number of employees over the last year. However, for our seasonal business clients, please use a 12-week average, monthly average from the periods of February 15th, 2019 to June 30th, 2019. And if you just started your business, say, as of starting July 1st, 2019 or afterwards, it'd be the average number of employees from January 1st, 2020 to February 29th, 2020. Also, please remember that the employee count includes full-time, part-time, temporary, and contractors.
Thank you, Michael.
I think also to note there is that hotels, restaurants, and franchises that have more than 500 people would still qualify this, as we talked about before.
Next question is there a penalty if we took advantage of the PPP for the 4-month period and then had to lay off or furlough people at the start of the 5th month?
So again, the CARES Act is a little gray here. It does not cover this. However, our interpretation is that there will be no penalty for this. We assume that we'd be hearing through the next round of the stimulus package if this could be impacted. But right now, we do not see any penalties included in the CARES Act as it is today.
Is the owner's pay part of the payroll calculation? Specifically, they have 2 full-time employees on the payroll and 2 owners that draw out of the business for pay.
So I think the best way to look at this is if the owners are on payroll and they're actually doing work for the business, then yes, that pay should be included.
If it's an S corporation, those owners would be getting W-2, so it should be included.
Thank you. Jared, next question. Can I include independent contractors in the PPP loan? If I pay someone as an independent contractor to perform a service, do I count them in my head count? What if they are an LLC?
So again, this is another gray area here, but our interpretation is that if you're hiring, for example, Bloom Shapiro to be your outsourced accounting firm, then that would not be included. However, if you're hiring somebody from, say, a staffing firm and you're hiring Mike as an independent contractor from whatever staffing firm, that should be included.
Thanks, Mike. Can you reduce salaries by 80% and still qualify? And can you lay off people ahead of filing for the loan?
So the answer here is yes. You have until June 30th, 2020 to restore your employee count and the compensation levels for any changes that you've made between February 15th and April 26th, 2020. Also, for the loan forgiveness, it will be reduced if you decrease your salary by more than 25%. So this question comes pretty close because they're reducing by 20% versus the 25%. So just be careful about that 25% level if you are reducing salaries of folks.
Does rent include common area charges and taxes or just base rent?
So right now, the CARES Act only refers to rent. So we interpret that as it would not include common area charges and taxes.
Okay. How do I calculate employees that earn more than $100,000 a year?
So the $100,000 should include everything that is in salaries, wages, tips, bonuses, and commissions. It does not include benefits. A great example for you to look at this and again use a calculator is the toolkit that we've built to help you determine what is included in $100,000 or not.
The next one represents what a lot of us are asking. When can I apply for the loan? especially the PPP. Maybe you can talk about the EIDL, and then Mike, you can address PPP.
Sure. So the EIDL, you could apply right now if you wanted to. So as soon as this webinar is over, you've taken it all in, you can go to the SBA.gov website and you can apply for that right off the bat. And it's, like I said, yesterday it took me about 5 minutes to kind of get through, and very simple. And again, they really look at this as being, you know, the lifeline to a lot of companies. And so they've made it quick and simple. And I want to emphasize that there's no cost, because what we're hearing out there is that there are some people going out there charging people to do this, and it's a little bit of a scam because there is no cost.
Yeah, and from a PPP perspective, you know, you're going to apply that through your SBA lenders, federally insured depositories, or credit unions. And again, if you want to see the list, the website, the SBA website has a list of all of this information.
Right, and that program is supposed to be open April 3rd, which is tomorrow. But you know, full disclaimer, we've heard that it may not happen tomorrow. Just trying to get everyone up to speed on technology and the right process to get it in there. But I'd be ready to go for tomorrow, because that's when it's anticipated to happen.
Yeah, and the other thing I mentioned this earlier is we recommend that you go to the bank that you have a current relationship with.
Can you apply for both the PPP and the EIDL loan?
Absolutely, you can apply for both, and I think you know, you can apply for both loans, but you can't use the funds from those loans for the same expenses. So you've got to make sure that of the two loans that you're using them for different expenses.
Next question is, are there revenue restrictions?
Yeah, the answer on this is very easy. There are no revenue restrictions in the CARES Act.
Is there a list of approved lenders?
Yeah, so there is a list of approved vendors if you're looking at it from the SBA side. Again, there's a website on there. There's about 1,800 approved lenders. And then from a PPP side, again, it goes back to all SBA lenders, federally insured depositories, and credit unions will be able to help you from the PPP side.
And then last question for today, gentlemen, are shareholder distribution draws included in the PPP loan calculation?
So this is a little bit of gray area. There's not a whole lot of information that's out there right now. The way we looked at it is if it's an S corporation and you are getting a salary through a W-2, you know, the thought process is that any distributions would be considered a dividend, so it wouldn't go into that. But if you are a partnership or an LLC taxed as a partnership and you're taking a guaranteed payment, that guaranteed payment is considered salary and wages subject to FICA and Medicare. So we felt that, you know, again, it's a gray area, and there hasn't been a whole lot of guidance on there. But we're thinking that the guaranteed payment, which, you know, you might say is the draw, the guaranteed payment would be considered compensation for the loan. But again, a distribution of previously taxed income or return of capital would not be considered. But again, it's a very gray area, and I think it's one of those things where you really need to look at the facts and circumstances of that.
Thank you, gentlemen. Again, we received a number of questions through the registration process, many of them employment related, and of course, we'll host that webinar on Tuesday, April 7th. In addition, we're hosting a webinar on Monday on cyber crimes and fraud attempts with our forensic experts and our litigation experts. And then on Wednesday, we'll be covering all the federal tax issues. So a lot of information out there. Our task force is working hard to not only analyze but disseminate this information. And we look forward to bringing you these other subjects next week. Just want to point out again, we have converted our landing page to be dedicated to the coronavirus and resources associated with it. please visit it. We organize it in such a way that we hope that you can get to the information that you need for whatever topic you're looking for more insight on. Thank you, and stay safe.